Hi guys, hope you're doing well. Today we have experienced an immense up rally, and also we have gotten a really nice breakdown in both the indexes. So I was actually explaining on mute. This is the second video which I am creating, and yeah, really frustrated because when I was explaining the first video, the video actually was on mute. So again I have to record it, but anyways we are going to do it. So first of all, I was explaining over here that today if you would have actually sold the put option, today would have been a really nice day. As you can see, if I zoom into this chart over here of Bank Nifty, the price action which it had created is really nice. Made a higher high, higher low pattern, higher high, higher low pattern, and obviously it would have been a buy till this point when it broke it with a really nice candle. And this is what I call a nice candle, guys, with no shadow. Shadow is the downward push portion which you see over here. There is literally no shadow over here, and it gave a really nice breakdown exactly at 135 or 130. You can say, I guess this is the 130 candle, so you would obviously get a good breakdown at those times because European market opens at around those times. So we are just going to check what's the difference between shorting options and buying a call options over here. And today you would have made a good amount of money because you have to take the decision first, guys, whether you want to go short or you want to buy options. And when do we buy options? I have always said that buying in the money options is advisable, but that too would be subject to some amount of decay, because if the market is hovering and the market is not that strong, there are some amount some bad news also in the market, like Powell punch Nifty at 52-week low, key factors behind the crash. These are all the main reasons. There is some amount of recession also, because you can see the weakness in global market as concerns over the possibility of a recession outweighed the optimism over US China talks. So that also was the main reason why we got this crash. And also you can see that that can we can explain why the market did not go up significantly, not in a really strong manner. Okay, so when you know that the market is not extremely bullish, when you know that the market is slightly bullish, you always short put options. You can short at the money or in the money put options, and easily there would have been 150 points caught, and it would have easily hit your trailing SL, and you could have exited one quantity. If you would have bought call option, you would be in a small amount of profit. Now coming on to the selling, guys, you can see over here we got a gap of, obviously this momentum is not we can't capture this momentum, it's not capturable, but you can see that we have risen by 1.11% in Bank Nifty, and Nifty was also similar to that. But when we actually went down, guys, you can see that the market actually went down by 1.74%, which is that's a 600 points drop, and that can be bad news for tomorrow's market also. So technically speaking, this would have been your sell when it broke this point with a really nice candle. Okay, partial bookings could have been done at this spot when it was bouncing, and then you could have booked some of it. If you are still holding, say, 3 lots, you could have booked some of it at this point. And it's all about holding your profits, guys. When you're seeing the candles are red, not even one single green candle, okay, you can say this candle over here is a green candle, but then if you would have waited, if there would have been one more green candle breaking this high over here, if it would have broken this high, then you could have exited your short position. But that's why we hold our winning trade to get all of these momentum. And when you see these big candles, this would have been your perfect exit, because this was a previous resistance. You can see 1 2 3 1 2 3 4 times and even 5 times we have actually bounced from this point, and this point served as a good support right now, but that too was broken, and most probably there would be a gap down opening tomorrow. So if you would have I don't know, there might be a small gap up opening. Obviously there has been huge amounts of volatility in the market, but higher chance of a gap down opening, and I hope that you have taken put options. If there's a gap up opening, you will have to definitely sell your position, but if you have taken in the money put options, then no worries guys, we may open somewhere at this spot, and after breaking this resistance 33,559, we can also go down further and we can experience some more amounts of rally towards the downside, and we can get this target also, that's 33,389. Again, it's also important to follow the fundamental news along with the technical. That's what I always say, but technically if you're following price action, everything is captured and you don't need any other indicators in order to capture all of these things. Okay, so I hope you have liked this video. Tomorrow we are definitely going into the market with a negative sentiment, so shorting the market, or maybe when it makes a high, maybe we can go for high price selling. When the price reaches a high point, we can short or sell the market at that point, and maybe perhaps we can get a good one tomorrow. Premiums would be a bit more lower, so you can aim for buying options, that is in the money put options. Okay, so I hope you like this video. Yeah, and if you have enjoyed it, give it a like, and I'll meet you tomorrow. Take care, bye.